Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now if you grew up playing Super Mario, you might already know that today, on March 10th, is Mario Day, a fan celebration day that's also been adopted by Nintendo from about 2016 onwards. So, fantastic day if you want to pull out that old game console if you still have one lying around. Now, the financial market mood was clearly brighter as well, and while we're tempted to cite that to Mario Brothers, there are three other factors that were likely behind that shift. First, of course, is that an EU summit is scheduled for later today for the region's policymakers to discuss the Ukraine conflict, but several reports also suggest markets are expecting significant economic measures, possibly via a new growth and investment model amid policy efforts to reduce dependence on Russian energy. Second, of course, is that oil prices have dropped sharply after the United Arab Emirates said it would encourage fellow OPEC members to increase oil output. WTI oil, for example, closed just over 12% lower. So that's a big move. And third, there was an unwinding of oversold conditions, and that was likely a contributing factor to the market move. We discussed this yesterday briefly in the context of the euro, for example, where we expected oversold conditions to trigger a brief rebound to 1.1 against the dollar, which now seems to have played out. This last point in particular caused us to view yesterday's big rebound with a little bit of caution. Whilst encouraging, the S&P 500 appears to be struggling to break below support at around 4,222. As we highlighted in our last weekly, the index would need to break back above 4,600 for the picture to brighten, at least from a chart and technical point of view. Now, shifting gears a little bit, the Chinese economic data is likely to be one focus area in the coming couple of days. Producer price inflation eased a little bit to 8.8% year on year in February, falling further from its recent peak. But we'd be cautious about extrapolating that trend, as the rise in commodity prices recently could cause at least a temporary reversal in the coming months. Now, today, China's money supply and new loan data is also set to be released. All of this, of course, coming against the backdrop of the ongoing NPC meeting, where growth stabilization appears to be a key focus. So that's the lens we'd view all incoming data against. Finally, we have US CPI inflation due later today. Consensus is looking for yet another rise to 7.9% year on year, which is likely to complicate the Fed's job next week. As we mentioned before, while a liftoff from zero rates is very much likely to happen, what's important is how the Fed signals it intends balancing inflationary pressures against growth risks from the Ukraine conflict and higher commodity prices. That's the one thing that markets are likely most focused on from next week's Fed meeting. The European Central Bank, of course, is scheduled to meet later today and has to address exactly that challenge at its policy meeting tonight. So to sum up, the mood's definitely bright in markets after yesterday's rebound. However, it's also a big day in terms of events in Europe, particularly with the EU summit and ECB meeting all on the same day, and of course inflation data due in the US. Now, Steve will be back tomorrow with the Through the Noise podcast, but I'll pause here. If you enjoyed this podcast, please don't forget to rate and like it. Thanks again for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.